Welcome back. Module 16, Income Tax and Derivatives. So this module is more for a income derivatives trader's perspective, more than a student or anyone, but definitely it is also useful for students. So why income tax and derivatives? So before going into the subject, I want to tell you 3 years, 4 years back when I was trading derivatives, started trading derivatives for me and my family in a small way. I wanted to know about the income tax implications. Unfortunately, I couldn't get the right answer. But of course, there are certain sources who provide a fantastic information. But I thought I was searching for many videos, YouTube videos and other things. I couldn't find one where it gives good information. Finally, I got one very good auditor, so who is doing a fabulous job. I have to thank him at this moment. But nevertheless, I got a good understanding with my own way of learning and desire to learn and know things. Then I thought, okay, since I am as part of Fibocan, we are giving educational modules, educational videos, why not let me put this also as a video that is going to be helpful for many people, right? Which is why the last module is Income Tax on Derivatives, module 16. As always, the LinkedIn details and YouTube details, contact details are given. Target audience, MBA, CA, CFA students, and in fact aspiring CA students and those who are doing articleships, definitely they will find it useful because they might be doing some audit of derivatives transactions and other things, which will be really useful for them. Definitely knowledge is power. And the traders, intraday traders, particularly derivatives and F&O particularly. Takeaways, derivatives income, capital gains or business income? That is the first question many people ask. People don't get an answer, but we have logically given why it is and where it has to be considered and why it has to be considered that way. We'll explain when we go there. Then computation of turnover of futures and options, that's very important because basis which the next step will come, tax audit, whether it is mandatory, and again advance tax payment. Many people, unfortunately many traders, they don't know that they have to pay advance tax, right? It is an unfortunate situation, but that is why we thought we will put this video. Then dramatic transformation in students, investors, confidence levels. Okay, student investor, why we have put? Because CA, CFA, we consider them as students, and investors and traders, right? So let's go straight away. Slide 4. What is it? How derivatives income should be treated? That's the first question people ask. Should it be treated as capital gains or business income? Straight away I will say, or for that matter, most of the people I have spoken, they will say it is not long-term capital gains. Within capital gains, we know long-term and short-term. Why? Because derivative is not an asset, it is a contract. So because it is not an asset, it cannot come as a long-term capital gains. Very clear. So there is no doubt. Because the life of the asset in India, at least maximum of this contract is only 3 months. The 3 month forward contract only is available on equity and index futures or options in F&O segments. Then the next question comes, some people say it has to be considered as short-term capital gains. Yes, one can think of, but again there are certain risks that are there, and why it is not prudent to consider there, I will tell you. If it is very few trades in a year, okay, for hedging a position or very few and negligible value, probably it can be considered as short-term capital gains. But where somebody has an habitual way of doing this as a trading, then it cannot be considered that way. Why? We will see that in the next slide. But again, even the very few trades, what is few trade, what is more trades? It is purely a subjectivity. Hence it is left to the income tax authorities, which is why we have to be very prudent. Then what we have to do, if the value is significant or if more trades we do, then it is prudent to show it as a business income. Okay, I hope up to now it is very clear. Let's go to the key differences. Why the key differences? Here you will understand why it has been done. So tax on capital gains, short term. Okay, anyway long term capital gains there is no question at all. Hence we will rule that out. At least as of today. So we are shooting this video in January 2023. As of today, the short term capital gain, because the tax rates will change periodically. Hence that might also change, we don't know. So hence as of this day, the tax rate, short-term capital gains is flat 15%. Irrespective of the income tax slab, a person is, right? Example, if a person is in 30% tax slab, she will get taxed at 15% short-term capital gains. Also, no expenses is allowed when you are considered as a short-term capital gains. Whereas what happens if it is a business income? Business income is taxed on the applicable tax slab of that individual. When we see that example, I explain that. Again, I given the example. If a person is at 30% tax slab, then she gets taxed at 30% for business income, or if derivatives income or profit is shown as business income. Whereas if it is shown as short-term capital gains, it is taxed at 15% flat. So you see the difference. Then applicable allowances are allowed, like internet charges, advisory charges, staff and other business related expense, because it is a business expense. So let's take an example. If Miss X, she earns 30 lakhs per annum through her salary and other means and other things, and assuming that she does derivative trading also and earns 9 lakhs as profit. So what happens if she were to show this 9 lakhs as a short-term capital gains? She will pay flat 15% tax and end up paying as 1,35,000 rupees as tax, right? Whereas if it is treated as business income, she has to club, because she earns 30 lakhs, club this income as a normal income, and tax will be and it will be taxed at 30% slab. Okay, applicable tax rate for her, which is 2,70,000 rupees. So as you can see clearly from the slide 5, that key differences, there is a tax savings from the investor perspective, from an individual perspective, but there is a, probably the income tax will consider it as a tax not what you call rightfully due to them, is not collected. Okay, I want to put it very mildly. Okay, hence it is purely a subjectivity aspect. It is prudent that if somebody is trading frequently or of significant value, show it as business income. Okay, this is my view, and I am not a tax authority to say that this is right or that is wrong. Please consult your tax authorities. My view I am putting with my knowledge, and the knowledge I got out of 3 years of searching and finally getting a good auditor 2 years back. Okay. Business income, the next slide. Business income, again within business income, certain features we will see. Speculative and non-speculative. There are two categories. In speculative, any intraday trades that you do, that is called speculative trades. And here the losses can be carried forward only for 4 years, right? All these are all as of January 2023. Okay, we don't know what it will change in the coming budget. We are not contemplating any change. We are saying, we are merely stating the facts, right? It can be set off only against speculative gains, right? Non-speculative, derivatives, F&O trade, even done intraday, is non-speculative. Why? Because it is considered for portfolio hedging. That is the basis on which derivatives have been lock-in of prices and other things that uses we have said, right? So derivatives, even if, let us say for example, somebody is buying a futures in the morning and selling in the evening, or selling futures in the morning and buying in the afternoon, or any time during the day, or options, sell and buy, she does on the same day, still it will be considered as non-speculative. What is the advantage in being considered as non-speculative? Losses can be carried forward for 8 years, and again it can be set off against any income other than salary income. So that's a great advantage in showing it as business income. What are the key activities and steps in what you call in finalizing the tax, or in finalizing the tax for that? One is the tax computation. So to compute the tax, the first and foremost number that is required is the turnover computation. So how the turnover is computed, that's very important. Unlike a normal business where it is sales minus purchase, that's your turnover, right? Here the turnover is slightly different, and particularly earlier it was slightly complex. Recently income tax notification in 2022 August, so options turnover has been made simpler. Determining the profit and loss, that is the next step. This is relatively easy. Of course, earlier it was tough for options, okay, and tax audit, if applicable. Then presumptive tax, 44 AD, section 44 AD, and pay advance tax. These are the key activities. So turnover computation. So turnover calculation as per ICAI guidelines issued note AY assessment year 22-23. They issued recently sometime in August if I am right. Okay. So what they are saying, total of favorable and unfavorable differences, this is applicable for all futures traders, whether you are a futures buyers or sellers. Okay. So premium received on sale of option to be included. However, where the premium received is included for determining the net profit for transaction, same should not be separately included. This mostly for option sellers purely they are selling, we will show with examples. And in case of reverse trades entered, the difference thereon forms part of the turnover. Mostly this for option buyers where they exercise the option or where they square off the transaction, right. So let's see with an example. As you can see in the picture, okay, in the slide, futures turnover calculation, this is relatively simple. You can see first is number, stock, instrument, number of quantity per lot, number of lots, buy price, buy value, buy date, sell price, sell value, sell date, absolute turnover and profit. As you can see here, absolute profit and turnover, each line item it is the same, right. Okay, but only thing is that profit, absolute turnover comes with removal of negative symbol. Okay. So at the end of it, out of 9 transactions I have shown, at the end of it you can see the sum of 4 crores 3,22,500 is the absolute turnover. What is the profit? In this case, unfortunately, this person has undergone a loss. The loss is 71,89,500. That is a loss in this futures for a turnover of 4 crores. Okay. So now let's see options turnover. As you can see, it is the same thing. Number, stock, instrument. Instrument here it is PE, CE. Okay. What type of instrument you are buying or selling? Quantity, number of quantity per lot and number of lots. Buy price, buy value, buy price, buy date, sell price, sell value, premium received, sell date, turnover, profit or loss. As you can see, the line number 2, IJKL stock. Okay, as you can see here, the person has sold the options, it expired worthless. That is why if you see here, premium received we have shown and profit and loss we have shown, right. It is shown as a profit. Okay. So, and line number 6 is very interesting. You see here, options bought but expired worthless. That means it is included in the absolute turnover, but it is also shown as a loss because he incurs a loss. So if you compute the overall thing, if you see here, the premium received is only 1 transaction he received, 2 transactions he received a premium of 35 lakhs or something, and the turnover is 2 crores 9 lakhs 92,388 and a loss of 12 lakh 29. 1 crore 22 lakhs 96,888. That is the loss on options. So now you have to combine both. Combining both, combined turnover, futures turnover is 4 crores 3 lakhs 22,500 and the options turnover is 2 crores 9 lakhs 92,388. Profit and loss, as you can see, I have put in the bracket, it's a loss 71 lakhs 89,000 in the case of futures, 1 crore 22 lakhs and odd in the case of options. Total of roughly around 2 crores loss on a turnover of 6 crore 13 lakhs. Because the turnover is more than 5 lakhs, tax audit is applicable. Tax audit is also applicable where if you are showing a loss but turnover transaction is less than 5 crores, that time also tax audit is applicable. So now let's say what is it required for tax audit? What is it required for tax audit? So if you want to avoid tax audit, you have to be under presumptive tax 44 AD. You declare 6% as your profit and state turnover on the turnover basis, declare straight away 6%. It is called presumptive tax. Normally it is 8%, but 90% of transactions, if I am right, more than electronically done, it is 6%. Because derivative transactions, everything is electronic, because the buy, sell, everything is done through a recognized stock exchange, hence everything is electronic, and any expense you have, if you pay through bank, it will cover this more than 90%. Hence 6% presumptive tax is sufficient. Okay. So what is it required for audit requirement? P&L statement from broker. So all the brokers today will give you the P&L statement, then the bank statements, then any expenses related to trading. If you are combining, having other expense, you have to separate this and show it. telephone, mobile expenses you are using exclusively for trading, internet expense, office expense, if office is set up to manage the trading, staff and administrative expense, any other expense related to trading. If you have all these things, you have to give it to your auditor. And audit and advance tax, as I said, audit if applicable if business turnover greater than 5 crores for a financial year. Also if it is applicable if it is less than 5 crores but profits are lesser than 6% of turnover, presumptive tax, right? Section 44 AD is presumptive tax, okay. So advance tax, one has to pay tax and definitely one has to pay advance tax. I am sorry to state many of the traders are not aware. So 15% by June 15th, 45% by September 15th, 75% by December 15th, 100% by March 15th. Trading, particularly in derivatives, unfortunately, unlike any other business, very difficult to give a forecast or projection. Somebody might be a profit for 10 months, 11 months, last 2 months can wipe out the entire profit, or the vice versa. Somebody can be in a loss for 10 months, the last 2 months can be a profit. Hence it is very difficult, and in fact many times my auditor asks, sir, you are paying more tax, advance tax. I said, sir, I don't know how much money I will make. Hence it's better that I pay slightly more, okay, then not to worry in not paying and pay any penal interest or anything, or attract the income tax authorities' attention. That is what I say, I think. And section 44 AD, as I said, presumptive tax, okay, less than 6. So I am sure that all the traders will now have a good understanding, but if you ask me, is this sufficient? Definitely not, because number 2 things I want to say, I am not a tax consultant, nor I am a CA by education or profession or anything. It is purely out of the acquired knowledge that I want to disseminate. I am doing this. Please discuss with your tax authorities and other tax experts before determining what is the right course of action for you, and do that. Thank you very much.